2-3 work together? Basically, this is a continuation of 2-2. Got our accounting equation here. Remember debt coil, help you remember the normal balance for debits and a normal balance for credit side. I've got our transactions, and they give you your account titles also. So, first transaction, March 11th, sold services on account to Johannes Eriksson, $125. So it does not say anything about cash here, so we're not actually collecting any money at the moment. Sold services means we made a sale, okay, but on account. So that means that somebody owes us money. So the amount that they owe us is going up. And when somebody owes us money, that is considered accounts receivable. Accounts receivable is an asset. Therefore, the normal balance side, the increase side of assets, is a debit. So we are going to debit our accounts receivable to Johannes Eriksson. They owe us money. Make sure you choose accounts receivable because they're going to pay us. Accounts receivable, we're going to receive that money. The amount is $125. And so that's the debit. The credit is sold services, so that's going to be your sales. Okay? Sales are income. In dead coil, sales is your income. And the increase side, the normal balance side, is credit. So you have a debit to accounts receivable and a credit to sales. Both of them are increasing. Accounts receivable is going up, sales are going up. All right, next transaction. On the 13th, we received cash from sales. So this time we actually received cash for making a sale. So your cash is going up. Cash is an asset. So the debit, the normal balance is cash for $260. Received cash from sales. So your credit is going to be for sales. And again, it's $260. The numbers that you use here are always the same, and you always have to have one debit and one credit. And you just write the debits first. That's just the proper way to do accounting. Okay? Third transaction, paid cash for telephone bill. All right, so paid cash, we're losing our cash. Our cash is going down. If you think about it, cash is an asset. The normal balance side for assets are debits. So if we're losing cash, we're losing assets, that means we're going to credit our asset. Okay, so that means we have to debit the telephone bill part. Now, go look at your account titles and look at your expenses, and you have rent expense or utilities expense. A telephone bill is going to be utilities expense. Okay, so paid cash for telephone bill, our debit is going to be utilities expense for $54. And our credit is going to be cash for $54. So we are paying cash, so cash is going down, and we're paying our bills, expenses. Expenses, the normal balance side is a debit. Okay, so that's where they normally go. All right, so paid cash for expenses or for telephone bill. The 16th, received cash on account from Johannes Eriksson, $125. So received cash. Cash is an asset. Assets have a normal balance side of the debit. That's the side that it increases. So our debit is going to be cash for the amount they're giving us, $125. And our credit is going to be accounts receivable because they're paying us, okay? Remember, accounts payable is when we pay someone. Accounts receivable is when somebody pays us. They give us the money, all right? So cash debit, accounts receivable credit. And then the last transaction, on the 19th, we paid cash to owner for a withdrawal of equity. So paying cash, that means our cash is going down, so it's not our normal balance side, it's not an increase, so cash is going to be a credit. Okay, so that means the other one has to be the debit. To owner for a withdrawal of equity. And if you go look at your account titles, you're going to have the owner's name here, and he has two accounts. He has a capital account and a drawing account. When he puts money into the business, that's capital. When he takes money out of the business, a withdrawal, that's the drawing account. So we are going to debit our drawing account for, how much was it? $200. And we are going to credit cash because we paid cash to the owner. Paid cash to owner for a withdrawal. Okay, and that's it.